Good evening, everyone. Sorry for the slight delay. So we'll be starting the session CBDC and cryptocurrency, covering examining security, privacy, and public policy matters. So we first call upon our session chair and moderator, Mr. Sridhar Sidhu, Senior Vice President and Head of Information Security Services Group, Wells Fargo. Hello, Sridhar. Good to have you here. And next we have
Good evening.
Aritra Sarkhel, Director, Public Policy, Government Affairs, WazirX. Hello, Aritra.
Hey, sorry, hi.
And next we have Francis Souza, Director, Strategic Partnerships, Central Bank Digital Currencies and Real-Time Payments, ACI Worldwide. Hello, Francis. And lastly, we have Harshdeep Rapal, co-founder, Upepo Technology Labs, India.
Hello, hi everyone.
Hello, Harshdeep. So we are waiting for Francis. So Francis will be joining us back in a couple minutes, so we can start the session for the day. Stage is yours.
All right. All right. Thank you. Good evening, everyone. Thanks for making time to join this interesting session with the ongoing DSCI FINSEC conclave 2022. We have an interesting topic on hand. There's a lot of global events are happening around cryptocurrency for the last few weeks. Everybody is aware who is losing how much money or whether somebody is making any money. But the topic of our conversation today, we are going to focus predominantly on the technology that helps both the cryptocurrency world as well as what we call as the central bank digital currency. We will focus on what are the benefits of actually having central bank digital currency, both on the business side, and then also what are the risks when it comes to the central bank digital currency in terms of security and privacy, and most importantly, the public policy matters around this topic. I have, as the DSCI team said, we have a great panel members who have been living and breathing this topic for the past few quarters or few years. So we'll get started while we'll try and get Francis to come online. So maybe just to set some context, when we look at maybe 2007, 2008, we're talking about distributed ledger technologies, blockchain, and how blockchain as a technology enabled the cryptocurrency world and how many people made money. There are hundreds and thousands of cryptocurrencies available which are getting traded every day. Somebody making money, somebody not making money, but having a significant impact on global financial ecosystem, right? And using the same technology, I'm sure some of you might have heard, some of the central banks were planning to look at how they can enable digital transaction processing for a real-time settlement within a given country using what we call as central bank digital currency. Some of the countries across the world, some of them in the South America region, some of them in the Europe region, some of them have implemented, some of them are in the stage of doing the POC, looking at what are the pros and cons of the central bank digital currency, right? So we will first look at what are the benefits of having a central bank digital currency. When we talk about CBDC as a concept, it is probably there could be 100 PhD thesis on this. So we will not be able to do justice to the topic within the 40, 45 minutes that we have. But what we're trying to do is to probably scratch the topmost surface of what the CBDC is all about and give you some thoughts for you to actually, as audience, to understand a little bit, and then probably do your own research to see where it stands and what are the things that will happen from an India context, as we are all in the Indian side of the world. So with that, let me first ask each of my panel members. Let me start with Aritra. Aritra, what are from your vantage point, what are the pros and cons at a macro level for CBDC? And just to set some context, are 2 minutes for each of the panel members. I know it's not easy, but we have a lot of things to cover. So with that, Aritra, over to you.
Thanks, Chief. Okay. At the outset, I think I'll make it very clear that CBDCs are fundamentally, they're like private blockchains. Inherently, they're a little different on the tech layer from how public blockchain function. That's one of the core things that people, it needs to be told outside. But let on that's one of the things that I always tell people. But in terms, I always look at it, if say every tech has some kind of usefulness, right? And in terms of advantages of how CBDCs are, first is very simple. It helps you expand your financial inclusion, right? One of the foremost advantages today that you have that CBDCs offer directly, rests in expanding the scope of financial inclusion. And I think we understand that. Like even today, I was reading something today morning, a major share of the world's population is still unable to access financial services, right? Remote areas in developing countries clearly has restrictions to on access to bank accounts even in 2022, right? So a low cost payment system like CBDC, I would say, facilitates transfer between individuals and customers to business through smartphones without holding a bank account. That I think is one of the primary benefits, if you can look at like that. Second, I think it's also this is something I've debated a lot with folks across the world in terms of also how it sort of ends the big tech monopoly. Like the CBDCs for me are also a sort of a competition to the larger big tech fintech firms, right? Because central banks, whether it's in India or any other Asian country, I mean, they could leverage trades of CBDCs for communicating their abilities, to deliver improved resilience of payment system. Therefore, benefits of a central bank digital currency could help central banks in fighting the monopoly of the large tech firms. Third, I think better efficiency in payment systems, right? I mean, the one of the I would say the significant advantage associated with CBDCs is the safety and the efficiency of retail as well as large value payment systems. In case of retail payments, the benefits of CBDC emphasizes to improve the efficiency of these process, the entire funnel, right, to make these payments. Examples, like I'll give you an example. All of you will get that. Like you have you have peer to peer, you have point to sale payment systems, right? There's some of the instances of payment systems that could be completely transformed through CBDCs. So large value payment systems, stuff like that. And the last, which I think can be done if things are happening that quickly in India or other Asian countries, is faster and better cross-border payment systems. And for that, you still need a lot of policy layer collaboration between a lot of countries, but it has massive potential. And I mean it. I've seen some products being developed for improving counterparty credit risk in the case of cross-border payments and settlement between banks. I'll rest at that.
Absolutely. Francis, over to you for your initial thoughts.
Yeah. So, benefits are, obviously it's a new subject in every economy, basically across the world. And you have central banks that are still scratching their head on this particular subject. A lot of benefits out there, a lot of risk out there, basically. Okay, what's the actual, is a CBDC in search of a solution or a problem? Okay, that's what it is. So top of the line, basically, I would look at it from a two-pronged approach. One is, let's say, from a common man approach, basically. Okay, so as Aritra said, financial inclusion, definitely a huge boost, basically. UPI has done, I would say, 80% of that job in being able to reach out, all across the country in terms of low value payments. And CBDC could probably cover that last 20%. And when I say the last 20%, okay, I'm just throwing a number here, just hypothetical, but you want to be able to cover the lowest rung of the population, who's actually still dealing on the small payments and, who are basically the unregulated part of the population, basically. And that's what we're looking at, being able to cover them, or other CBDCs being able to cover them. The second point is innovation and ubiquity. Innovation, very definitely, today we're just simply talking about UPI, being able to do so much. But eventually, when we look at Web3, when we look at AI, okay, we metaverse. We look at machine-to-machine payments. We would be adding a lot more than just regular human payments or person-to-person payments, or corporate payments that are happening today. Talk about the informal economy. CBDCs would definitely be able to restrict the informal economy, because they'd be able to monitor transactions, be able to prevent corruption, be able to prevent crimes, basically able to prevent exploitation of the poor, to a good extent. Okay, they would be able to enable direct subsidies, helicopter money for the poor. Talk about it from a central bank and a banking industry perspective. Okay, definitely increase KYC and AML methods. Okay, that's going to get a huge boost. Talk about payment governance. CBDCs are programmable. You could have smart contracts on them. You can earmark them for targeted spending, basically. So you very definitely know where they're going, which direction they're going. No way for them to get skewed off from their direction. Saving on signorage charges is a very important point for central banks today. The amount of money printing cost and the amount of logistics that goes into pushing money across the country is definitely a huge cost, basically. Anyway, I've taken 2 minutes, I guess, so I could have talked on.
Absolutely. I know that, Francis, absolutely. And imagine potentially a world few years down the line, majority of the print fiat currency is converted into a digital rupee or e-rupee, whatever we call it.
Yeah.
The amount of benefit to the regulators to curtail potentially the money laundering, because everything under the purview with all the right kind of approvals to monitor the transaction processing, which otherwise in a physical world is significantly challenged, right? So that's a huge one. It's a trillions of dollars of industry, the money laundering itself, which potentially can. So let me turn to Harshi. Harshi, your initial thoughts, please.
Yeah. So I've been a serial tech entrepreneur. So everything that comes to me, first I see it with the lens of entrepreneurship, business, and of course technology. So I'll although we are talking about Web3 and blockchain right now, and digital currencies, but I'll take you to Web2. So when the world moved to Web2, which we commonly known as the internet. So when the businesses move to internet, imagine conducting all your business, developing software on the internet, and then being forced to say send the communication by India Post, or sending somebody to collect cash from somebody, that okay, we have done this work, now we need cash. So payments as well as communication at that moment also moved from cash to online payments, be it NEFT or IMPS, or communication also, attachments via mail. All those things happen. So right now what we are seeing is, even when the businesses and the business solutions are moving from Web2 to Web3, imagining that the payments staying on the traditional banking infrastructure is slightly ridiculous. I mean, although it still happens. Around during COVID time, 100 million checks by the US government were sent via post to people. So right now, even in the age of Web2, although I mean check and cash payments are also happening, but majority of the payments, they reduced, as Francis mentioned, the kind of money we spend in printing checks or printing money, that was drastically reduced when we started online payment transfers. So right now, for example, in my venture also, I'm building an infrastructure to move traditional agreements, contracts, certificates, licenses onto smart contracts. So in this scenario, where we are building programmable contracts, programmable licenses, or say agreements that execute themselves, and we still rely upon check payments, uh, or the traditional banking system. And there are entrepreneurs, or businesses who would love to use the solution that we are building, but are slightly skeptical when it comes to the use of cryptocurrency for these payments, because I mean it sometimes falls into the gray area of public policy. Now with CBDC, a government stamp or a central bank stamp, when comes onto the say digital currency that the people are using, they would love to combine this kind of payment with the Web3 solutions that we are building. So a lot of innovation is happening, as Aritra also mentioned. A lot of innovation right now on the business solutions front is happening, powered by the CBDC. It will create amazing infrastructure for businesses to kind of reduce transaction days or execution days from days to hours to seconds or nanoseconds. So that's my view when it comes to. And just to add to Francis' point, right now, on an average, countries spend around 0.5 to 0.9% of the GDP, of the total GDP of the countries, in payment settlements and money transfers. Okay.
Yep.
So imagine a country like India where the education budget is around 3.5% of the GDP. We are losing 0.5%, which is as compared to the education budget, we are losing 0.5% of the GDP in just managing payment transfers. So that's the kind of money that we are going to save once we have the digital currencies in place. So that's my initial thoughts.
Absolutely. Thanks, Harshil. I think summary is, look, CBDC is going to revolutionize maybe a very effective and efficient payment transaction services, both for retail as well as the corporate world. That's number one. Number two is it would curtail potentially any kind of a what are the right choice of word here? Any kind of illegal activity that otherwise is possible through fiat currency. And third is CBDC is, properly governed, which is not going to be as speculative as we see on the cryptocurrency side of the world. So the probability of people losing money or maybe trading the way they're trading to get benefits of all sorts of things that are happening in crypto is very, very limited. But it's a stable one, right? So that's a summary, right? So that's on the business side. Now let's probably change the gears and see, okay, so there are some organizations, some countries in the world in various stages of evaluating or implementing CBDC. But if you were to look at from a core security standpoint, physical, if you are actually printing currency and moving, it is fundamentally about physical security, the insurance and the fire and distribution, additional expense and all that. But when we do that on a technology platform in electronic form, it has got its own risks and challenges. So let us talk about the security aspects of CBDC. Maybe let me change slightly gear. Let's turn to Francis for his initial inputs. What are the security challenges that we see when we look at potentially CBDC, whether globally or from an Indian standpoint?
Okay, let's speak from an India standpoint. Okay, India, in fact, is kind of ruling the #1 position when it comes to digital payments. Okay, UPI is doing phenomenally well and really far off, from the rest of the countries, especially China, who's kind of in the #2 position. Okay, so let's look at what we do here. UPI, IMPS, RTGS, NEFT, all of these have proven to be resilient systems. Okay, and I'm sure there've been attempts to hack them. Okay, and these systems have actually come out strong in terms of being able to maintain their resilience in front of the hackers. Okay, so what is a CBDC at the end of the day? A CBDC is a moving piece of technology, right? And it's as secure as its gatekeeper, who in this case would either be a central bank like RBI, or it could be an arm of central bank, whichever. I won't take name here. Okay, so what I would think is, if we want to actually ensure a secure CBDC, the first thing we should be doing is leveraging the existing payment rails that we have, right? They're already secure. Okay, you can create an interoperable system between the CBDC and UPI, and for that matter, RTGS, NEFT, and all of them. Okay, and actually leverage the same security that you have existing today for your CBDC in the future. And obviously, you got to stay in touch with all of the best practices that are happening in the security industry today. Okay, no excuses for that. But you would actually come out shining from a security standpoint. So that's one. Okay, and that is purely a technology aspect. I'd also like to hit on another technology aspect, which is also an operational aspect, and that's basically from the programmable aspect of the CBDC. Okay, today, if we look at CBDC, is definitely programmable, but are we comfortable from a policy standpoint to actually expose CBDCs to being programmable by private entities, right?
Yeah.
You can let government do programming on the CBDCs, log them for a certain duration of time into contracts, but would you allow that to be done by a private entity? There's a possibility of a contract, being kind of taking a long time, locking up a lot of CBDCs or millions or trillions of CBDCs, basically. Or you could have CBDCs stuck into contracts that are into litigation and could take decades and decades together. Okay, instead, let those CBDCs roll into the free economy and use stable coins that are approved by the government to basically lock into smart contracts, and kind of keep the system balanced, basically, and burn the stable coins once you close the contracts. So just some thoughts here from my side.
Yeah, I mean, burning the stable coins is very, very critical part of it. That's where probably the the misgivings can happen. So let me turn to Aritra. Your thoughts on the security aspects of CBDC?
Before that, I'll tell you guys one thing. We all keep talking about let's end cash as soon as possible. Let's get digital. I hope you all realize RBI actually makes a lot of revenue through printing money in India. They actually make a lot of profits by printing
Absolutely true.
money.
That's the technology profits that they talk about.
Yeah.
I just pulled because the point struck me. I pulled up a number. Apparently, it's just on my phone screen. Apparently, they made 138 CR in 2015 just pure profits in printing money. But besides that point of RBI, see, there are two things. I'll pull out two things that I've personally seen because I've gone through these at the code layer of the CBDC models. One, I think, is straight away. For me, centralization in terms of cyber threats, like a single point of failure kind of thing. Because for me, this is how I look at it. Invariably, a CBDC would necessitate centralization, which would
Yep.
amplify uh, already rife cyber vulnerabilities, right? And increase the surface area attack vectors to now include central banks in addition to the overall economy, right? So for me, to truly leverage the inherent uh, cyber resilience of these distributed systems, public-private blockchains, along a comparative free market for the movement of value on the internet is a better long-range posture. But just as failure on any one bank erodes confidence in the banking, sometimes a CBDC could potentially transition this risk to central banks, negating the benefit of strategic risk sharing structures and operational air gaps
Yeah.
between the participants.
Yeah.
The second, I think it's has less to do with cybersecurity, but more to do with individuals like you and me, right? In a country like India. Now, a CBDC, particularly if issued at the retail level, would present might present a potentially troubling encroachment on consumer privacy and protections. Like the way I look at it, what would stop the weaponization of CBDCs against citizens, or potential blockage of lawful transactions by groups that fall into disfavor, right? So, to the right of lawful, I'm just talking law, the use of money as let me frame this: the use of money as a public good to which equal access is a human right, and how it is saved, spent, secured, should be as free as possible while maximizing penalty on bad actors. So I'll put it in that.
Yeah, I mean, I think one of the things I want, obviously, next probably a few minutes later was about the privacy aspects of it. Good that you started that conversation. So let me turn it to Harshi in terms of security aspects from a CBDC standpoint. Your additional thoughts on that?
Yeah. So I mean, most of the points have been mentioned, but there are two things that I would like to discuss. So, number one, say the financial inclusion. We had a huge drive of creating bank accounts for the unbanked population in India. Majority of these banks, they did not see a considerable number of transactions, or many of them didn't even see a single transaction beyond the first transaction, or the money that was transferred by the government. Okay. uh, I mean, the reason that cash is still the king is because a lot of people from even our parents' generation, and say maybe people who are not that well read, they still believe in cash. They might have access to the smartphone but do not use cash transfers or digital payments. Okay. So what is going to happen is, I mean, a considerable part of the population is going to face the same issue when we move to web3 or CBDC payments, because they might have access to the technology. We might provide them the endpoints on their smartphones that they have in their hand, but how to use them, how to beware of fraudulent transactions, how to kind of not lose money, and how to even fight back to recover that money. So that is going to be a huge effort, which is going to be complicated by the already, I mean, a lot of gangs operating, which call that I'm calling from the ATM department of SBI, I need your number and all. A lot of money is lost to these kind of scams. Okay.
Yeah.
And this might, I'm not sure what kind of, or what volume of fraud is going to happen when CBDC or cryptocurrencies, they become say kind of mainstream. But a lot of resistance is going to come from these kind of users, because they have already been a part of scams of the earlier payment systems. So that kind of assurance, security, and say structure needs to be created for this population, which will be directly jumping from cash to crypto or CBDC payments. Number one.
Yeah.
Second is, on the government side. So what happens is, again, I'll come from the entrepreneurship side. A lot of entrepreneurs, they work on the bleeding edge of technology. So when I say bleeding edge of technology, it consumes a lot of time, effort, and money. And sometimes not only the companies collapse, even whole categories collapse. I mean, some of the categories we might have seen that, okay, these are very promising categories, they'll change the world. Suddenly the whole category collapses. Or maybe there are a few bad players in these categories, and they kind of create a negative vibe for the other players who are not who are trying to create better solutions for the world. And this is,
Yeah.
CBDC is a programmable money, and government can kind of restrict the usage. I mean, for these currencies not to be used in certain areas, and those might fall in the same industry areas where these categories collapsed, or there were a few bad players. And because of the
True.
restricted usage, people who are trying to do good in that area might suffer. Okay. So right now, for example, because of the policy issues that we are facing in India, a lot of startups have moved to Dubai, or they've moved to US. I mean, I also have had a lot of conversations with investors suggesting to move to US or Dubai. um, this is the same thing that might happen with CBDC also, where the government has the direct access to the money that you are spending. I mean, right now we still have the liberty to spend the money, even if some category is not working, or some business area is not performing as it should have been. We still have the scope of
Uh,
doing innovation.
yeah.
So the second
True.
thing, second point is, on the privacy part is, even if some entrepreneur might want to explore some fringes of the restricted areas, he or she will not be able to do it because government has restricted it. So
Yeah.
that's the second point.
No, true, true. The point is that obviously, I don't expect as a reasonably pragmatic financial services person, I don't expect in the next 4 to 5 years, the entire money mechanism move to CBDC, both either
Yes.
on the wholesale corporate side of the world or from the retail. But at least in the corporate world, there is an opportunity for, as Francis and Aritra also mentioned, the ability to settle transactions you know, irrefutably at a nanosecond, and potentially if there is, global or regional collaboration, even in the, one country to the other country, payment transaction processing and settlement can be even faster too. Yeah, so let's switch gears. I thought while I talked about security aspects of it, Aritra picked up something on privacy, you picked up something on policy. So the two additional questions I thought I will pose to this panel. So let me again turn it, probably switch the gears and ask Aritra. So from privacy standpoint today, right? I mean, once we start using, whether the corporates or individuals, right? And at the end of the day, it is closed, probably we call and managed by either the central bank or the components of central banks, with or without intermediaries between the consumer of the CBDC, whether retail or corporate. Um, there is definitely an opportunity um, for the privacy aspects of the individual or the corporate and the account holders on those channels to be exposed to monitoring, which otherwise is not feasible on the physical world with the fiat currency, printed currency for that matter, right? So what are the privacy aspects that you see, three of you, one after the other, the privacy aspects that you see as the dangers or red herring, and what could be the policy measures to give that comfort to the participating entities, be the retail or corporate, on CBDC? Aritra, you want to start?
Yeah, I mean, as I stated that, I mean, if you go by the constitution, if you go by article 14, 19, and all of that, if you go by the fundamental rights. Now there is one argument where if you're not doing something wrong, why are you afraid to share anything, right? If you're not doing something wrong, why are you afraid to tell anything? But at the fundamental level, I the reason I'm backing public blockchains, and the reason I'm also backing at the same point centralized blockchain products like CBDCs and stuff like that. But at the core, at all of it is data privacy. You can still There are ways you can still work this out. Now, first I'll tell you what part of it, and then I'll tell you how this can be solved. Now, one part of it is purely in terms of certain countries, not our country. There's a beautiful country. We have great laws. We have great systems in place to fight the wrong. But there are other countries where there are issues. Those countries, if CBDCs comes into play, this becomes a tool set in the hands of the government, and they can do whatever they want. Imagine there is no financial ecosystem between. There's only one at the top. It becomes a tool in their hand. They know what you're doing, why you're doing what you're doing. They can stop your financial ecosystem for that individual, for that group, any day they want. Now, shouldn't it happen to the wrong people? Absolutely. Shouldn't it happen with people who are doing something wrong? Absolutely. But at the same time, imagine it is utilized in the wrong way. There's always that fear of utilizing the wrong way, right? Second, to this point, it can be solved. How it can be solved? Now, in technology, there's something called zero knowledge proofs, and there's some fascinating tech layers which have been built right now. If you utilize zero knowledge proofs over here in CBDCs, it can still function without taking in a lot of. At every given instance, you don't need to have every information about me, right? If I can just put it in a layman's language like that. But again, having said that, I think for me, privacy matters, and a lot of people, privacy matters. And first issue that we have to tackle is this heightened issue of privacy to users. And see, a central entity can potentially end up handling enormous amounts of data, right, regarding your and my transactions. Right? It has implications, given that digital currencies will not offer users the level of privacy and anonymity offered by transacting in cash. Besides, the data stored with central bank in a central system will also have great security risk. Again, single point of failure.
Yeah.
We need to have data security systems in place which will set up and prevent such data breaches. But my biggest fear is, imagine it goes into the hand of wrong governments. Imagine
Yeah.
then what it does to the system over there. It's madness happening over there. From that point of view, I'm still not very comfortable with the idea of one entity, all data in one single place. There's a reason these kind of things make sense. But with stuff like zero knowledge proofs and with the law and with proper laws in place, you can still have a functioning, like in our country. You have all these different opinions, right? You have tech systems in place.
Yeah.
You can still have the law to fight this out. So yeah.
No, absolutely, Aritra. I mean, tech layers and proper regulatory measures, as you rightly mentioned, right? It's a great tool, but the point is, it's like a kitchen knife. You can cut your vegetable, or you can slit somebody's throat.
For
This is a
sure.
fantastic tool. If it is in the democratic world, used for right purposes,
Yeah.
it will elevate the social and financial inclusion of people.
Absolutely.
If it is in potentially a non-democratic countries with the potential for misuse, it can really cause havoc. The same concept of CBDC, potentially in developed countries with the right democratic values, can really make difference. So let me turn to Harshi to cover those aspects, and then we'll go to Francis.
Yeah. So as Aritra already mentioned, I am also slightly skeptical when it comes to a central body managing all the data. And where I mean, right now, if it is that, okay, XYZ has say a amount of money or b amount of assets, that's good. But when it comes to knowing who is spending how much money on what, that actually creates some issues. Because see, when governments change, maybe not in our country, or in other countries, when governments change, sometimes they come with a certain ideology, and there might be issues of restricting the money being spent by certain elements on in certain areas on certain things. Okay, so if we have strong enough say legal infrastructure in place, because as per the constitution or as per the laws of the country, something which is legal, something which is illegal. It doesn't care whether you are transacting through CBDC or cryptocurrency, or you are
Of
dealing
course.
with cash. Okay, so till the
Yep.
time the rights of the citizens are protected by the law, and there is the government or any other say related institution does not have the right to restrict only certain individuals based on ideologies, that is really good. And I think I definitely think it can be implemented. But sometimes what happens is, even in democracies, sometimes what happens is, say for example, a government comes in a certain states and say bans liquor, or bans the sale of crackers maybe. Okay, so overnight, I mean, right now people still have the leverage of using money to buy or maybe travel to other state, enjoy liquor, or I mean, there are still ways. But when it happens with, when the government knows who is spending where this kind of money, the whole industry can actually collapse. Okay, I mean, say suddenly the government decides that okay, you cannot spend money on liquor in this state. So overnight, so what I intend to say, I intend is, so there has to be certain checks and balances in place, certain rights that are ensured for the citizens across the country or maybe even across the globe, that these are the things the citizen is entitled to. After that, the second that comes is the constitution and the laws in place, because if they are valid for web 2, they'll be valid for web 3 as well. So once those things are ensured, I think there is absolutely no problem in rolling out CBDCs. But as we earlier, the panelists discussed, when it falls into the hands of wrong governments, maybe in smaller countries, in other continents, it can spell disasters.
Yeah, and probably the 100% CBDC based economy is maybe few decades
Yes.
away from us. Maybe 5, 10, maybe 15% of CBDC with a printed fiat currency will be the order of the day for at least next 10 to 15 years.
Yes.
So yeah, what rightly mentioned, it seemed like the one we're talking about right now seems like what we have observed in the traditional payment and settlement systems using SWIFT in the East and the Europe region when things, geopolitical situations came up, and how everybody wants to actually curtail the payment transaction capabilities of certain countries for certain reasons. That can probably aggravate in the CBDC side
Yes.
if the regional collaborations are there. Right. Let me turn to Francis. Francis, your thoughts on this topic?
Okay, so in fact, good point shared by Harshi as well as Aritra. Okay, we have all the rights to be skeptical about, obviously, sharing our privacy in terms of, doing the transactions that we do basically. And that could be anything, right? High value, low value. Frankly, at the end of the day, we're going to be actually sharing our personal data that would be open up to authorities without our knowledge, basically. So, but then, I'm not being an optimist over here in that sense, basically, but I think we need to look at, if there's a problem, there could be a solution to, right? So okay, let's look at the problem. So CBDCs, well known, they would be storing data, they would be enriched with metadata, so that would make them easily traceable, controllable. Basically, central banks would be able to use this data to be able to, what do you say, tweak policy, monitor and tweak policy, basically apply real time, actions to the economy that could have an immediate corrective, what do you say, impact on the economy, basically. So yeah, all said and done, very positive side of having this data, being able to work on it, being able to do good for the citizen and the country and everything else. Yeah. Okay, and I won't talk of the bad side of it, because already Harshi and Aritra have actually put some very strong points out there. Okay, in terms of how privacy would be impacted, basically. Now the thing is, yeah, concern for individual privacy upfront, no doubt about it. But let's take ourselves as examples, right? Probably 10, 20 years ago, if somebody said, "Hey, a free ice cream for all your private data," we probably would take the free ice cream, right? Okay, so that's the kind of situation we are living in basically today, where you have individuals who are concerned, and you have individuals who are concerned, but also letting go of data. Okay, maybe they would limit the amount of data they share, but that happens basically. Now let us look at it from a digital payments standpoint. Okay, today, aren't we thankful Okay, for example, on UPI, if I were to do a transfer of 50,000 rupees, right? And then the receiver said he didn't receive it. Okay, and I'm sure that I've sent it and I know that he's received it. Okay, now how is this going to be proved? This can only be proved to the data that's tied with the transaction, right? Aren't we thankful for that?
Yep.
That my dispute will be settled
Absolutely.
simply because that transaction points to me and it points to the second party. So we have to look at it that all said and done, as much as there's a concern, okay, there is also a requirement for data to be present with the transaction. Okay,
Absolutely.
so this is one absolute use case for privacy being there, being a need as part of the transaction. When I say privacy, as in data being a need as part of the transaction. Now let's come to the solution part of it. And in fact, I'm happy that Aritra actually raised the point of zero knowledge proof. Okay, so two very active think tank bodies. One is the Swiss National Bank. In fact, a couple of months ago, they released a paper on the zero knowledge proofs for CBDCs. Basically, a very effective. I was not able to read the entire report, but really good amount of information. It gave an immediate idea to it. The other body is closer to home within India itself. It's iSpirit. In fact, they introduced a white paper, and they call it the Bharat Distributed Ledger. Okay, wherein they actually maintain two ledgers. They maintain a private ledger and a public ledger. The private ledger basically has all the information in terms of the individuals or the corporates or whatever be it. So it could be the private ledger could be linked, let's say, to a KYC server or to an ID server, the Aadhaar, and all of that stuff. But at the end of the day, it's a private server. Okay, and the public ledger, it's a private ledger, and the public ledger actually talks to the private ledger in terms of the zero knowledge, notarized zero knowledge proofs, basically towards conducting transactions. So yes, the transactions are transparent on the public ledger. You can see them happening, but you'll never know who's behind them. And those transactions are totally legit transactions that are happening. So this is my point of view, basically, when it comes to privacy. Okay, what, why, when, and how we need it.
I really like the choice of words on that front. You didn't say you're pessimistic. You said you're not optimistic, and that's a good starting point to balance out the potential risks vis-a-vis the benefits of it. Non-repudiation is absolute given in these kind of technology platforms. That data, relevant for the transaction helps at non-repudiation, which was not the case earlier. So, yeah. So let's switch gears. We have a few minutes. Some of the countries have been at different stages of implementations. And the other thing potentially countries would look at is, okay, once I start looking at maybe my high value payments or corporate transaction processing, settlements through my CBDC, how about I do the same facility to my customers in my country when they need to do the transaction processing with their counterparts in other countries? So where do you see potentially the regional, geographic, bilateral, multilateral, or a global alliances for a real-time transaction processing and settlement using CBDC? Is there anything that each one of you can throw some light on and maybe turn some time horizon, maybe a moonshot, but nothing wrong in actually having some good expectations. So let me turn to, again, Francis, for you to start with you.
Yeah, sure. So in fact, that's a very interesting subject. In fact, just yesterday I was, talking to some of my colleagues, didn't expect it to come up over here. So, some of you or most of you, who are well, kind of reading the subject very thoroughly would have heard about Project Dunbar, would have heard about, Project Bridge, Project Jura. Okay, and these are projects being run by BIS with a couple of countries across the world. A lot of them strongly in Southeast Asia. Okay, as well as Africa, basically the Middle East, which is Project Aber, another one basically for cross-border payments. Okay, so and I, at the same time to oppose, or rather to go along with this, okay, was a statement that Michael, I'm sorry, I can't get his. Okay, anyway, the easiest way to say it is the MasterCard CEO made a statement yesterday about, why he thinks SWIFT will not survive in the next 5 years, right? Okay, and I think that's the kind of thing here that CBDC enables economies to have direct corridors. Okay, so a country like India could have a direct corridor with any country in the world. Okay, you could have 200 corridors with 200 countries, so long as they're not on the sanction list. Okay, and that's another important point here, right? Okay, today, because we do all of our transactions through SWIFT, okay, and because we are not on a sanction list, Okay, we are part of the free global trade policy. Okay, we can do things right the way we want to do. Let's look at those countries which are under sanction. They are the ones who would actually use the CBDC to their advantage, right? Okay, all of the sanctioned countries would actually create direct corridors between themselves to be able to create a direct, a free marketplace for themselves to be able to trade between themselves and be able to also pay each other, okay, without any discomfort, without any of those transactions being seen by SWIFT or being seen by the global world, okay, or by
Yep.
global leaders, which, okay, so this is what CBDCs, when it comes to high value payments, is actually going to do, when it comes to cross border payments. Basically, that's my thought here.
That's going to be a whole new world with the World Trade
Absolutely.
Organization and global regulations, because it doesn't matter whatever be the kind of restrictions you put for global trade, if you have a direct corridor with non-SWIFT centric transaction processing and make money flow, depending on which geography we're talking about, what kind of country that is, it's a huge challenge for global sustainability. It's a as we started, it could be a multi-hundred PhD thesis kind of work that can happen. Let me turn to Harshi, your thoughts on this topic.
Okay, so what I personally feel and have experienced in my conversations with business leaders and policymakers is, in fact I am collaborating right now with Digital India to for the next Digital Desh report on the payments front as well. So what after discussing with a lot of business leaders and policymakers, I'll concur to what Francis has just mentioned. Everybody expects that majority of the CBDC transactions will initially happen among countries, among central banks for large payments, because that's where it'll be easier to manage a lot of money transfers with lesser number of transactions. And
Yep.
second it'll be MNCs working, because transfer pricing is a huge issue, because you might have heard about Apple parking their money in certain countries and not bringing back to the US because of taxation and all. So second I mean the second rollout that might happen will be for companies like Apple or HP or Intel. So those kind of companies, or maybe companies like British Petroleum and all, uh, for again managing large amount of money in smaller number of transactions. But when it comes to say paying for buying smaller things, or maybe even say larger transactions like real estate or buying cars and all, for the common man, it'll still be a traditional banking and a cash model for next few years at least, and then a hybrid model for a long time before we completely move to either cryptocurrency or CBDC. So the number of transactions, I would say again the Pareto principle. So right now 20% maybe of the number of transactions might be handling 80% of the money transfer that happens across the globe, but 80% of the transactions which are operations heavy, which actually consume a lot of effort on printing money, changing hands, or transfers happening between bank accounts. So that'll still take maybe a decade, or even more than a decade, for rolling out CBDCs and crypto, maybe private public on the public chains, that kind of model.
Thanks, Harshi. So lastly, let's go to Aritra for his final comments, and we will wrap it up. Aritra?
I completely I completely embrace what Francis was saying. I've been saying this in all corridors of the government for a long time now. Like, look what happened in February after the war, right? And when we were trying to do a regular trade with Russia, sanctions came, right? Imagine those sanctions, and the same, and we've gone through sanctions in the past as a country, right? What happens when you have sanctions? You need a separate route, because I still don't understand why SWIFT controlled by only in XYZ, right? I mean, why do we have to fall under that? So I completely agree with what he's saying. There are companies who are working on that. There are companies that we know of that working on that in terms of building a no CBDCs or whatever, just a blockchain led solution where you recreate what SWIFT has done for banks over the years. That's one. Second, from an India perspective, and folks which work, countries which do work with India from the remittance angle. Our country gets more remittance than FDI gets into this country, right? And I know there is some work on the UPI side with a bank in somewhere in UAE, in a bank in other parts of our neighbors. But a lot of things can be done on the remittance or based on stable coins and CBDCs. But for that, you need collaborations and on law things between countries to happen. And third is something that I've seen a lot happening in the last 1 year because of the nature of the industry, is the fact that there are a lot of cyber crimes that happen on in and around crypto, in and around all these stuff, right? And imagine these things are also happening on CBDCs. Now, what happens is basically, imagine this, and we've seen this personally. A case happened somewhere in Kerala, and they eventually realized this was on an exchange somewhere in Amsterdam. How do you even reach out and go catch the criminal? There are multi-level layers of processes for that, right? Now, for these kind of things, if you have a collaboration between countries on digital assets and stuff like that, and so that the information exchange happens. So imagine it's like a shared database you have on a blockchain between these 4 or 5 countries, right? So stuff like that. And I think one is cross-border trade. It completely changes the game. Second is remittance, and the third is data sharing. It completely can be read on a blockchain with an economic layer of CBDC. So
Yeah, absolutely. I mean, de-intermediation for faster transaction processing has its own challenges when the transaction goes wrong, right? There was probably
yeah, and I'll tell you why.
intermediation has got some benefits of it. Yeah.
Tell you guys why. Hello.
Hello. Yeah. Continue. Continue, Aritra.
So I just quickly put out a point. I'll tell you one of the largest issues that most exchanges face in India, uh, like crypto asset exchanges who deal with virtual assets and all of that, is on the sides of FEMA, because assets are still not defined under the FEMA regulations, right? Now, and imagine this is the need of the hour, because every country has some of the other exchanges who are dealing with some form of virtual digital assets, right? And for these assets to go from country A to country B, you need to have these kind of FEMA regulations which are in tune with 4 or 5 other countries. That's when all these trades become easier and it's not looked at in a susceptible manner and stuff like that.
Absolutely. I think we are over time by 5 minutes, but as I said at the beginning, it's a fascinating topic, and it's so vast that we can't cover even in a full credit course and undergrad programs for sure. Thanks to all 3 of you for wonderful insights. And if I look back, maybe 20 years ago, we started with those days a little bit of a real-time gross settlement system between banks. In 20 years' time, we have moved to UPI and the billions of transactions happening every month, to a near-time horizon of CBDC. In a matter of 2.5 decades, the country like India has leapfrogged in terms of transaction processing and payment processing at an unimaginable pace compared to many of the other countries in the world. So I hope our regulatory ecosystem keeps us intact to continue on this path for CBDC. Once again, thanks to each one of you for your wonderful insights, and thanks to each one of you for joining and hearing us, and hope you gathered some information from this topic. So with that, thanks everyone. Bye-bye.
Thank you. Thanks, everyone.
Bye.
Thanks a lot, Francis, Sidhu, Harshdeep, and Aritra. That was a great session, and hope the attendees felt the same. So there are more such sessions lined up for tomorrow. Meet you tomorrow again. Thanks a lot, guys. Have a great day.
Thank you.
All
Thank
right.
you.
Thank
Bye.
you. Bye.